What is happening, Bulls and Bears? Back with another dose of economic reality. And yes, let me try to get the date right today. July 26th, 2022. Today's Tuesday. Been on a bit of a pain medication. As some of you know, I did have an injury. Nothing too serious, but I am on crutches. And it's an ankle injury. It's what's known as an avulsion, which is a minor break or a small break in the bone where the tendon or the ligament attaches to the bone. Not sure how else to explain it, but it's a small break and I'm on crutches and might be a little bit loopy on this pain medication, but actually coming off of it. So hopefully less loopy today than what I was yesterday. But let's get into the economic news without further delay. It's getting harder and harder to find a place to park your money, to find a place to hide. If you're someone that is shorting the bounces, then you're doing very well. Another beat down today in the stock market. All major indexes in the red. We've got retailers sounding the alarm that consumers are broke and pulling back on spending. So many people putting money in their gas tank, energy, utilities, rent, housing, everything just at elevated levels, and people are having a more difficult time. So as this continues, you're going to see people pulling back on more entertainment type of spending. Does it mean that the stadiums are going to be empty, that the theaters are going to be empty? No. But you're going to see definitely a wind down in that non-essential type of spending. Also, stocks are getting hit. Retailers, like an example here, Aaron's rental. They rent out TVs, furniture, and stuff, I believe. Never been to Aaron's. Stock crashes as high inflation impacted the lower income consumer. That's what the company says. That's not me saying that. Stock down more than 25%. That looks like it might have recovered a little bit, but that's a big drop. 25% shaved off your portfolio if you're holding that stock. Hopefully someone wasn't all in on that stock without being diversified. And that's why I've got to stress, diversification. Even metals, though, precious metals, gold, silver, are down big. So just the opposite of what you think would happen with inflation. Gold and silver you think would be going up for protection, but those assets are being beat down. Now, I've got a whole report coming out here soon on the suppression of those assets, precious metals, and it's mind-blowing what's happening behind the scenes and how the prices are being artificially suppressed. We're going to talk about that in a future report. Now, ultimately in this economy, I think we're headed into some very dangerous times. What I've referred to it here as an economic collapse. Now, people hear the word collapse and they think I'm predicting a crash, right? So this is a slow motion collapse, right? So you're not going to wake up one morning and everything's going to be down 80, 90%. Could that happen? Absolutely, yes. If we have some sort of outage, black swan event where everything goes dark, the internet goes out, just the internet going out would cause chaos in just a matter of hours. The power grid going down, some other major disaster, the banks get hacked. Guess what? It's true here in America. The banks do not have your money. They may have digits they can loan out in the form of a digital loan. When you get a mortgage, they're not handing you bills for a mortgage that they're loaning you money on. It's digital. So if everyone went in to demand physical cash or coins, the bank would not have it. So if you do see some sort of panic, you'd see bank runs just like that. Will there be a panic like that? I think the odds are high that will happen at some point, because as we continue to get into this economic disaster, it's more likely to happen. The more people see the economy for what it really is. And I think people are getting alerted to this slowly but surely. Will it happen like we saw over there where the banks are being guarded by tanks? I hope not. But it wouldn't surprise me, because the banks here, it's very similar. It's all fractional reserve. The banks don't have the money, and physical cash is less than 10% of all money that's out there. So think about that. 90% of all cash out there is digital. So it's just a digit on the screen. It's on your phone. It's on your computer screen, on your tablet, but it's not real money. All right, let's get into some more news here. Former CEO, here comes a flurry of retail bankruptcies. Former CEO warns that we are headed for a flurry of bankruptcies likely in the first quarter of 2023. That's a little bit later than what I predicted. I still predict we're going to see some major economic fireworks here in the second half 2022, which we are in. And I have to go back and remind people over the last few years heard me talk about how home prices weren't going to fall, that home prices weren't going to fall. And yes, I did say that for years, and we were right. But I didn't say they were never going to fall ever in the future. I've never ever said that home prices would never ever fall in the future. Anybody that does say that, they must have a really big crystal ball. But what I'm saying now is, yes, home prices will fall, and they actually have fallen. We see even Chicago. We reported a few months back in March or April, that home prices are down in Chicago year over year already. So anyone saying that I said that home prices could never fall, that's impossible for me. Well, it's not impossible. Anyone can say that, but I would never say that. How would I say that knowing what happened in 2008? How would I say that home prices could never fall knowing what happened in the financial crisis? Obviously, it's true that home prices can fall, and they will if everything stays as is. Could they come in and cut mortgage rates again? Absolutely. Could they put a freeze on foreclosures? Absolutely. Could they bring in a bunch of rescue programs to help people get a down payment for a home and bid home prices up higher? Absolutely. The powers that be could do these things and pass these laws and these measures to do that. Do I think they're going to do that? Not immediately. It's possible down the road, but for now, we're going to see further weakness in prices in the housing market. But here's the thing about the CEO predicting a flurry of retail bankruptcies. It's the former CEO of Sears. The failed Sears. So do we want to listen to what that CEO says? Or maybe it's someone that's speaking from experience. Maybe he's right. And maybe he saw what happened to his own company. And he sees the same thing with lots of other companies that he saw. Please let me know what you think down in comments. That's a recent article here out of Yahoo Finance. Recent article here, The Hedge, the state of the U.S. consumer. You want to talk about a consumer that's struggling. McDonald's, yes, McDonald's. McDonald's customers trading down. You know it's bad when McDonald's customers are trading down, right? They buy value items instead of combos. What's a combo? Well, unfortunately, I know. I've eaten some fast food. Not many nowadays, though. Ever since I'm getting older, I try not to. Fries and a drink and a sandwich together, the little bundle, they call that a combo, and it's a little bit cheaper than if you buy all those items individually. So now they're seeing people, what they mean by trading down is they're buying just one or two items from the value menu instead of the combo, right? People don't have as much money to spend. Their credit cards don't have as much of a credit limit as they used to. So please let me know what you think about that. When McDonald's is reporting that people are trading down, then that could be a sign of something, right? All right, back onto housing. New homes, prices dropped. Is it a crash? I said there wouldn't be a crash. When I talk about housing, I talk about the housing market overall. New homes are about 15% of the overall market. It's mostly previously owned homes or existing homes. So this number should not be looked at as the total housing market, but it's a pretty big price drop. Listen to this. Recent data from 451,000 down to about 401,000 for the price of new homes. So we're already down about $50,000 for new homes. And if that continues, that's going to bring the rest of the housing market with it, maybe, unless, again, new packages are introduced. Also, sales, another plunge. So prices and sales coming down. So you can't just blame the falling sales on lack of inventory. It's buyers are scared. Buyers are scared. No one wants to catch a falling knife. When we want to talk about things getting worse, here's another piece of evidence. Recent article, Bloomberg, difficulty paying bills tops pandemic high in U.S. Census survey. So the share of Americans who report living expenses and are having difficulties paying their bills has surpassed its 2020 peak. In a U.S. Census Bureau survey underscoring the toll of soaring prices on budgets. The middle class is in big trouble. People are getting wiped out. We're going to see a bigger separation between the haves and the have-nots. What side are you going to be in, or what tier are you going to be in? You're going to be in the haves or the have-nots, right? Right now I'm somewhere in the middle, struggling to hold on to the haves. Things are hard. Things are difficult for a lot of people. Hopefully most of us will be in the haves tier that upper tier, but it's getting more and more difficult as the top 10% gain more and more of the wealth. Or will what we will experience down the road, will that be a reversal? Will the little guy, the middle class person, get caught up? Will this be a buying opportunity for the little guy, the working person? We'll have to see. But I have some fears, especially when you see reports like this. Rents spike big as big-pocketed investors buy mobile home parks. Remember that walkthrough that I did? It was a modular home park where I said homes can be bought for $300,000, and some people watched that and they said, "Hey Jay, that's mobile home." Well, it's close. It's a manufactured, what's called a modular home, but then you have to pay this lot rent. What I talked about in that video is these people are paying $900 something a month for lot rent, but they can raise that rent anytime, just like they can raise rent on if you're renting an apartment. So you own the home, but you don't own the lot that it's sitting on. Completely crazy, right? And they can just raise the lot rent. Well, big investors are scooping up these parks, mobile home, manufactured homes, modular home parks, and increasing the rent big time. So it doesn't stop. And again, please let me know if we see any major price corrections. Will the big money just come in and buy up the scoop or the dip, so to speak? And we'll just see this wealth transfer and home ownership transfer to the top 10% more so. And the little guy is going to be left scratching their head, wondering why they still couldn't buy a home, even though prices may have fallen. They still couldn't buy a home. Their credit was banged up. They had so much debt they couldn't qualify for a mortgage. Or maybe they did qualify for a mortgage, and maybe they even had cash, but at the end of the day, they were outbid by a mega investor, a big money investor. To me, that's what could be happening. Home ownership could drop, even though prices are coming down. Home ownership could still drop, and it may be a double-edged sword, or it may be a something that's sweet and sour, right? At the same time, it's prices come down, more affordable, but people are so broke, so far in debt, and big money's waiting on the sidelines to scoop up these homes that it could be a bad thing instead of a good thing. Please let me know, but that's what I see. I wish I had better news for you. If you guys have any good news, please let me know down in the comments how this is all going to be fixed. Maybe somebody has some magic wand that's going to come and fix this, or a superhero is going to come down. If that's going to happen, please let me know. Otherwise, keep stacking, keep preparing people. Stay safe. Bye for now. Peace.